PPC was founded in 1892. It is South Africa's largest cement producer.
1892, that is astonishing. But remember, it did quite a significant shift in the last 10 years, having a really, really tough time with regard to its local market. But in, Africa, expanding. But that strategy seems to have been coincided with a bit of a downturn in the African continent.
Market cap here, 8.6 billion rand, a PE ratio of 77.9 and a PE ratio of 77.9 and a dividend yield here of 6.1%. So talk to me about the PE ratio, one of you. You're going to jump in here.
Yeah.
Well, I mean, it is what it is because there's been lots of write-downs and reorganizations and recognitions and shutting things and closing other things down. So I think it's really just probably a reflection of the fact that the last set of numbers had some once-off write-offs which depressed the profits, which means the PE ratio is high.
And it has been a long, as you mentioned earlier, this has been a beleaguered stock for some time.
Yeah. I think if you buy the share, essentially what you're doing is you're buying into the belief that Africa is still the growth story, because PPC has a line, they say cement is the new gold, and the future of this company lies largely in what they can do in Africa rather than locally. What's really hurt them over the last few years has been illegal dumping of cement, so people who import lower quality cement into the country and sell it to their market base at half the price, but obviously it's half the quality. That's really hurt them. But if you're going to buy the share, it's really about, do you believe that the growth story is still Africa and still believe in that infrastructure project?
Do you believe that the growth story is still Africa?
Yes and no. Yes, simply because there's a lot to do and there's a lot that hasn't been done. So I guess law of averages, at some point that infrastructure has to be built.
He's not too enthusiastic about Africa's growth story.
Remember, under Ketso Gordon, this was in the aftermath of the global financial crisis. So it had been at 50 rands a share. It's done a reverse 10 bagger, as you can see there. It's down now at 5. The question really is, did the strategy to go into places like the DRC, Ethiopia, Rwanda and so on, is that going to pay off in terms of future growth? Maybe, because they bought out some various facilities there. They've got high debt. At one point they looked as though they were going to hit their debt covenants, and there were those kinds of issues. CEO Daryl Castle has been at the helm now for 3 or 4 years, battling to try and stabilize the situation. So there's been a lot of noise around it. And then in the home market, where they used to have 55% market share and good pricing power, that's unfortunately come unglued with the factors that
we haven't got much time to chat about it. Do you want to call it hot or not at this stage? You're not hot on this. It's not now. It can't be the 10 bagger of the future. No, not. Stay away. Hot, not.
No, I'm afraid lots of competition in its home market and a little bit extended debt-wise and into these countries where, as much as we would like the off-take to be, quick and exciting, it remains still a little bit mixed.